So when doing a bank reconciliation statement, very often they'll give the bank statement and also the cash book. Either they might give the closing balance of the cash book that they have prepared, or they might give you a partially completed cash book, and they will ask you to compare with the bank statement and update the cash book and then prepare the bank reconciliation statement. Always remember, what the bank enters on their debit side will be entered on the credit side of our cash book, because what we enter as a debit will be a credit entry for them, and what we enter as a credit entry will be a debit entry for them. Reason is, when there is a positive balance in the bank account, for us it's an asset, because it's a money owned by us. But from the bank's point of view, it's a liability for them, because this is our money and they owe that money back to us. So for them it's a liability. So if there's a positive balance in our bank account, we record it as a debit entry, but the bank will see it as a credit entry. So first thing we do is we compare their debit column with the credit side of the cash book. So opening balance is 500 debit. For them it's a debit, means for us it's a credit. That's why you see the opening balance 500 on the credit side of our cash book. So that is okay. Then there's $100, a check paid to Steve of $100. That has been entered in the cash book as well, so we'll put a tick in front of both figures. Then there's a $300 check paid to Chichi, which is there both in the bank statement as well as the cash book. But see this, this 50, that the check paid to Max, this $50 check has also been recorded in the cash book, so we put a tick to both. But this 20 bank charges and this 30, the rent paid, has not been entered in the cash book. By the way, this SO stands for standing order. A standing order is where you have given instructions to the bank to pay a certain amount, to transfer a certain amount from your bank account to another party's account on a certain fixed date. So since so now you can see both 20 and 30 has not been updated in our cash book, so these two have to be updated in our cash book. So let's record 20, we can say charges, then 30 rent. Then on this side there was a $60 payment made to Chonga, which was not updated by the bank. So this is something that should be updated in the bank reconciliation statement, something that we have updated but the bank has not updated yet. Then we'll compare the credit column of the bank statement with the debit side of our cash book. This 1000 is been recorded by both parties. The 600 also has been recorded by both parties, but not this 100. So this is something that the bank has updated, but we have not updated yet. So we need to enter that in our cash book. Dividend 29th May. Then on the debit side of the cash book, this 50 and this $60 checks received by Ruth and Ryan has not been entered in the bank statement. So these two are what we have updated, but the bank has not updated yet. So we need to enter these in the bank reconciliation statement. So in the bank reconciliation statement, They have started it with the balance as per bank statement, that's 700. That's the closing balance of the bank statement that they have provided. It's a credit balance. A credit for them means it's a debit for us. So this is a positive balance of 700. Then in the cash book there were two debit entries, this 50 and 60, which we have updated but they have not updated yet. So these are receipts now. These are money that came into the bank account. That's why we debit it here. So once bank updates these two, the bank's balance should increase by these two amounts. So these two are what we should add to the bank statement balance. So 50 and 60, we can say Ruth and Ryan, that's 110. Then on the credit side of our cash book there was a $60 payment to Chonga which was not updated by the bank. That's a payment. Money goes out. That's why we recorded on the credit side of the cash book. So once the bank updates this, their balance should reduce by this 60. So this 60 should be deducted. You can say Chonga and deduct that amount. And once you add minus these amounts, what you will get is the balance as per cash book. In other words, once you balance the account, the balancing figure you get in the cash book, that balance carried down, brought down, that's the same amount you should get as the final figure in your bank reconciliation statement.